Imagine waking up to market chaos on the news. But instead of panic, you feel a wave of calm as you check your account and see those dividend payments rolling in like clockwork. What if I told you that market crashes weren't something to fear, but opportunities that could actually accelerate your path to financial freedom? I've been investing in dividend stocks for years, and I can tell you firsthand, the strategy I'm about to share has allowed me to build a growing income stream that gets stronger regardless of market conditions. If you're serious about building wealth through dividends that can help you retire years earlier than most, smash that like button and subscribe right now, so you never miss the next market-beating opportunity I share. The truth is, right now might be the golden opportunity you've been waiting for to set yourself up for early retirement through dividends. Yes, markets have been extremely turbulent lately. Yes, many high-yielding stocks have pulled back sharply. But here's what most people miss. This turbulence has created a rare window where dividend yields are spiking on quality companies. As the saying goes, fortunes are made when blood is in the streets, and smart investors know these moments don't last long. Today, I'm going to show you why dividend growth investing is the ultimate early retirement strategy, how this sell-off is unlocking once-in-a-generation buying opportunities, and reveal the 3 specific dividend powerhouses I'm personally buying right now to accelerate my own financial freedom journey. Let's zoom out for a moment and ask ourselves, why dividend growth investing? The strategy creates a foundation for early retirement that few other approaches can match. Think of it as building a financial fortress with 4 unshakable walls. First, you get reliable cash-flowing income without needing to sell a single share. This means you're not at the mercy of market prices when you need money to live on. Second, you gain protection from market volatility because those dividend checks keep coming even when prices fall. While others panic during market drops, dividend investors can stay calm, knowing their income stream remains intact. Third, you harness the incredible power of compounding. When you invest in dividend growth stocks, not only can you reinvest dividends to generate more income, but each share is also increasing its payout year after year after year. Finally, you achieve true financial independence because you're no longer dependent on a job or perfect market timing to fund your lifestyle. Your dividend income stream can roll in indefinitely, giving you the freedom to live life on your terms. But here's the critical part. Not all dividend stocks are created equal. To retire early, you need to invest in businesses with durable models, payouts that grow faster than inflation, and yields high enough to replace your working income. And that's where today's market sell-off comes in. The recent tariff fears have triggered widespread panic selling, creating opportunities to buy exceptional dividend stocks at deeply discounted prices. The market is throwing a sale, and we're going shopping for our financial freedom. Let's talk about our first golden opportunity, MPLX. This midstream energy infrastructure company has become one of my favorite holdings, and for good reason. MPLX currently offers a massive distribution yield of over 8%. But unlike many high-yield traps, this distribution is rock solid, covered approximately 1.5 times by distributable cash flow. Think about that. The company generates 50% more cash than it needs to pay its distribution. That's the kind of safety margin that lets you sleep well at night. MPLX also maintains a conservative leverage ratio of just 3.1 times, one of the lowest in its sector, earning it a strong investment-grade credit rating. Being primarily focused on U.S. operations means it has minimal exposure to international tariff issues. What really excites me is the growth potential. MPLX increased its distribution by 12.5% just this past year, with an expected distribution KGR exceeding 10% for the foreseeable future. Imagine that. Not only do you get that substantial 8% yield today, but that income stream is projected to grow at a rate that significantly outpaces inflation. You could potentially spend your entire yield and still enjoy an increasing standard of living over time. This growth projection isn't wishful thinking. It's backed by management guidance and analyst consensus. The recent dip in MPLX's stock price, while not enormous, represents a gift from the market that smart dividend investors shouldn't ignore. Our second golden opportunity is NNN RET. a triple net lease real estate investment trust with one of the most recession-resistant business models you'll find anywhere. What makes NNN truly exceptional is its remarkable consistency in all economic conditions. It currently offers a 6% plus dividend yield and has increased its dividend for 35 consecutive years. Think about everything that's happened in that time frame. The COVID crash, the great financial crisis, the dot-com bubble burst, technological disruptions that changed entire industries. Yet through it all, NNN kept growing its dividend year after year without fail. A key factor in this consistency is its incredibly high occupancy rates. Even during the COVID pandemic, which was perhaps the biggest challenge a retail-focused REIT could face, NNN maintained a 98.5% occupancy rate. During the 2008 to 2009 financial crisis, its worst occupancy was still an impressive 96.4%. With a weighted average remaining lease term of approximately 10 years, NNN offers exceptional cash flow visibility for the decade ahead. Like MPLX, it's 100% US-focused, minimizing international trade and tariff exposure. Despite these strengths, NNN is currently trading below its net asset value, a rare occurrence for a company that historically commands a premium. It's also available at a significant discount to its price-to-AFO multiple. What this means is, you're getting this carefully cultivated portfolio, managed by an exceptional team with a decades-long track record, at less than you'd pay if you bought each property individually in the private market. And here's the potential catalyst. If interest rates fall as inflation continues to moderate, barring any major tariff impacts, or if we enter a recession that drives rates lower, NNN would likely see a substantial tailwind. With its long-duration cash flows, it often functions as a bond proxy and would benefit significantly from lower rates. With NNN, you're not just getting a 6% yield that grows annually regardless of market conditions. You're buying quality real estate at a discount while gaining income security and peace of mind. Our third golden opportunity represents the foundation of a strong dividend portfolio, the Schwab U.S. Dividend Equity, ETFSCHD. Despite being a blue-chip ETF that has grown its dividend at a double-digit rate since inception, SCHD has pulled back sharply in recent weeks. Part of this decline stems from its energy sector exposure, which has been under pressure. However, the market is missing the bigger picture. SCHD holds over 100 high-quality blue-chip names and is well-diversified across sectors, with significant positions in consumer defensive companies like Coca-Cola, Pepsi, Verizon, and Home Depot. These are exactly the types of businesses that tend to thrive during economic uncertainty. Meanwhile, its energy exposure actually positions the ETF to benefit from long-term trends like the growing AI boom and America's reindustrialization efforts. It also serves as an excellent inflation hedge. Goldman Sachs research has identified energy as one of the most effective sectors for protecting against inflation. The recent market pullback has pushed SCHD's yield above 4%, one of its highest levels in years, while its dividend has grown at an impressive 11% compound annual growth rate over the past decade, with a minimal expense ratio of just 0.06%. Almost all of that yield goes directly to you as an investor. SCHD isn't just another ETF. It's a total return engine that can serve as the cornerstone of your dividend growth portfolio. The current opportunity to buy it at these levels doesn't come around often and could significantly accelerate your journey toward financial independence. So let's put it all together. Dividend growth investing is about building a fortress of consistent, durable income you can count on regardless of market conditions. The current market uncertainty and fears around tariffs have created indiscriminate selling, giving us rare opportunities to buy some of the highest quality dividend investments at significant discounts. While stocks like MPLX, NNN, and SCHD may experience short-term volatility, their fundamental business models remain intact, and their ability to continue growing their payouts is undiminished. If you're serious about retiring early, living off passive income, and protecting your portfolio from market crashes, opportunities like these don't come around often. These are total return powerhouses that pay, grow, compound, and protect your financial future. I'm personally adding to all 3 positions in my own dividend portfolio right now, because I believe the current prices represent exceptional long-term value. The path to financial freedom isn't about timing the market perfectly. It's about building a dividend machine that works for you in all conditions. 10 years from now, I believe we'll look back at this period as a prime opportunity that dividend investors were able to capitalize on. The question is, will you be one of them? If you found value in this breakdown of these dividend opportunities, make sure to hit that like button and subscribe to the channel. I deliver fresh dividend investing ideas every single week to help you build your own path to financial freedom. This video is for educational and informational purposes only. Investment performance shown is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Thanks for watching.